Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo Night video for August 21, 2018. We're talking bend break, breakout fade, breakout fail. We'll start with the S&P futures and then go through the Nasdaq, Dow futures, and the Russell. The Russell being the exception today because it made a new all-time high, while the S&P fell just a little point shy of that all-time 2875 ES high. We have two things to look at. It's going to be, of course, that 2875 level and this upper trend line. Taking it a step further, we do have a reversal candle down away from this pivot on little volume divergences, and this is our hourly chart. We're taking a look at this gap up through resistance into some open air spot that tagged the just shy of 2875. We're looking for a similar play to what we saw in 2865 with the gap up, stall, sideways action, down action, and then a pullback down away from this spot. Not dissimilar from what we saw earlier at the prior resistance play. Taking it from the hourly chart back to our daily chart, this is all we're looking for another sell swing down away from 2875. That will take us at least toward the 20-day moving average. One little tip always to consider when looking into the future is draw out any trend lines, be sure to extend them, and any moving averages. We're looking at price levels, and that's going to be 2,800. It's going to be our key spot to watch for the future, 2,800. It is a round number, but also resistance, support, support, and support. We are looking for a dominant thesis sell swing once again, down away from this pivot, playing at least toward the 20-day moving average, probably beneath it. So as you frame out your swing trades and any type of intraday trades, think of them in terms of the departure. Once again, down away from these resistance pivots. Minimum target, just like we saw earlier in August, is our moving average. Larger target is the 2,800 spot and marker. The Nasdaq not showing the same level of strength because it is just beneath the all-time high and the 7,500 pivot. It's forming its own rising wedge, and we just talked about this triangle in last week's video, and we saw the breakout from a range contracted move to a range expanded and the turnabout. Now we'll continue to watch the 7,400 level and the 75. That is a 100-point range. If we can break beneath this little spot marker pivot, 7,375, and then go beneath 7,350, that opens up a rapid sell swing really to the 7,250, could be even as low as 7,200. But again, watch your daily chart Nasdaq and note that it is not quite at the all-time highs. That's in part because of some of those titans or monsters of tech have been a little weaker lately. The Dow has been a stronger component, but it is not at those all-time highs. Its prior high was just about 26,700, 26,800, and that's again back into January, February, before the collapse. So we can draw our own little trend lines and update those for the Dow futures and see that our pivot spot marker is just shy of 26,000, but it comes just to this point beneath that level. And that's going to be our double price pivot with again a reversal candle. So further downside action opens up one more sell swing down away from our trend line and our pivot. So the rest of this week, watch your 25,800 and the reversal candle with divergences. The one exception to the rule from today's session is the Russell, because it went ahead and broke through a resistance, pushed away from 1,700 and stalled at the 1,725 level. It did have a stronger breakout and a slightly weaker pullback. The Russell ended the session up 1%, whereas the other indices ended the session roughly flat, despite a gap up and initial trend day action that reversed back to a weak close, again, into resistance targets. That will form the bigger picture, the broader backdrop from which we're going to trade this week. Two things to note. Wednesday, tomorrow's session, is going to have the release of the Fed minutes. Might not surprise the market, but it's good to know that that will be coming out in the afternoon session, and that's just going to tell us what the Fed deliberated, what they said, what they talked about, and it will not have a policy adjustment announcement. They won't raise or lower rates with the minutes. They'll just release what they discussed. The other thing, Fed related, is Jackson Hole. That's the Wyoming annual meeting with the Federal Reserve, where they get together, they chat, they discuss, they plan, they strategize, they meet, they talk, and eventually do release a statement that's coming up later in the week. So those can be catalysts, if it's a bullish, unexpected surprise, to ignore and override all these bearish logic and push the indices through to new highs. But until that happens, and unless that happens, the markets do continue their overbought, overextended, and divergent spots. One other way to look at that would be on the advanced decline and the tick. So we'll jump this up in a final note to the ADSPD, and that's our advanced decline differential. Pull this back to a larger perspective, and we note that divergences tend to happen at turning points. We're seeing that happen now. So with the S&P futures, we have this push up to the new highs, and as that has occurred, our AD line has declined just about every single day. That's a non-confirmation that goes in there with volume. Pushing it forward to a lower frame, we see that the indices itself creep higher, but the AD line, or the advanced decline differential, and that's just stocks that are up on the session minus those that are down, is showing persistent weakness or divergences. That's another way to say that the market is overbought into resistance with a reversal candle, if you will, with divergences. Does it guarantee a sell swing outcome? No, of course not, but it does forecast that. Just like the other times, we've seen the market in similar methods, in similar modes, and at similar levels. Of course, be prepared if something unexpected happens. That will be a short squeeze breakout above 2875 in the S&P. That could propel us, believe it or not, to 2900. But that does remain the alternate thesis as we plan the rest of the week with some Fed announcements and some Fed information and data, with these bear or sell swing prognostications or logic to the downside. Take care, be safe. This is Corey with your Theo Night video for August 21, 2018. Take care.